NASDAQ and S&P 500 see its worst day since 2020, each dropping around 5%. Then, what about for Apple? It has lost 8%, losing 255 billion worth of market cap. What about for Singapore banks? Each losing 3 to 5%, correcting massively in the last few days. All this because of Donald Trump's tariffs, correct? At least that's what you read in the headlines. We used to think that Xi Jinping was the crazy one. Now we know who the crazy one really is. So what's going to happen in the world? First one, you see the EU, represented by French President Macron, has mentioned that they will urge their companies to pause US investments. China seems like they are taking a harder stance to retaliate. Question is, would this cause a recession? Would this cause a real market meltdown? I don't know. Actually, nobody in the world really knows. But we succeed in investing not because we know that buying today, we have a rebound tomorrow definitely. That is not how investing is done. Investing is understanding the long-term goal. Investing is staying patient, which I'll elaborate in a quick while. Today, I have two key questions for you, just in case you are also a bit concerned. Because my goal again is to help each and everyone listening in to become a better investor. That's why I teach in my investment summit. So the first question goes like this. Are you keeping 100% in cash? If that is, don't do that. If you sell all your stocks right now or don't buy anything at all, you may be keeping 100% cash. Cash, let me remind you again, is the worst performing asset class over the long term. It loses to stocks, it loses to bonds, it loses to investing in property, it loses even in fact investing into gold. In the long term, cash is 100% going to get eroded by inflation. Cash feels safe, cash feels warm, but actually it's choosing the slow death route. And remember this again, there is no billionaire who got there owning cash. It is true. You think about it. All the billionaires have investments in one form or another, most likely company stocks or properties. So when you understand the logic, you need to apply the right thinking process. I've seen some people mention before, maybe it's risky right now. Me and my wife, we decide we will wait a bit longer. Don't worry, we'll come back to invest. My answer to that is no. Most likely you wouldn't. Because if you would have bought in the global financial crisis of 2008. You have bought also in COVID crash in 2020. Do you remember how scary these times were? I have been investing through these periods. And let me recap again. Global financial crisis was super scary. Lehman Brothers, which was once too big to fail, collapsed. Citibank brought to its knees. Every month there's a major company failing or needing a bailout. If you can't remember, go check out history. What about for COVID? First time in the world people see lockdowns, that every economy is in recession.
These are heartbreaking events in our nation's history.
When you are an investor, you are bound to meet crisis periods. And the key again, or the simplicity of it again, is just survive past it. It's like buying a house. If there's a global financial crisis, there's a COVID, do you sell your house? No, right? You just sit and wait on it, and what do you realize? After the crisis period, whether it's few months or few years, things will get back to normal and better. Remember that, and again, holding cash is accepting that you will get your monies eroded by inflation. This has never been more true to reinforce. The second question I have is, do you have a proper investing system? As I've shared many times on the channel, money is made in the buying, and the stock market is very profound. It transfers money from the inpatient to the patient. And let me elaborate what does that actually mean. For an impatient investor, jumping in, hoping for fast results or certain results, and once they don't get it, they realize, it cannot work. They jump out. In that jumping out process, they accept losses and someone else is on the buying side, scooping up what they own on the cheap. And when things go better, the price appreciates. It's as simple as that. That's why the impatient will always lose money and the patient investor will always compound money. It reinforces if you're thinking, how come I always lose money? Is it I don't have the luck? Right now I see so much luck manifestation advertisements. Or is it I don't have some stock picking skills? It's not. Every investor goes through bearish period. Every investor has seen losses. The key again is patience. If you're a new investor doing a lot of market timing, jumping in and out, it's very fun. I've been through that phase myself, and I realized once you run a family's money, retirement pot, few $100,000, few $1 million. Jumping in and out is crazy. It does not grow money after all. It is just only fun. The same adage for market timing. The Hall of Fame room for market timing is an empty one. Warren Buffett became a billionaire because of long-term investing. And he's mentioned many times, speculating on what would happen next, whether it's recession or interest rates, is not helpful for investment returns. To this point, if you agree, smash the like button, press on subscribe, especially along the way. If there's more crises, let me do some quick reminders for us to get grounded and do the right investing steps. And as always, if you'd like to find a bit more, check out our Telegram group, where over there I do polls. You can see that some are getting impatient while some are happily scooping up investments. Now, if you'd like me to teach you how to build investment systems, this chapter is for you. Think about this. When you see market price change that drastically, do you feel angry? Do you feel scared? If you are, maybe the amount invested is too big and you are getting emotional. Let me recap back the simple, plain old solution done to death already, and it's none other than dollar cost averaging. Don't make decisions on investing. Don't overthink, am I getting the right price? Or will the price drop tomorrow again or not? Right price, best price, these kind of terms do not exist. Everybody has a different best price, and that's why in the near term, market is a voting machine. You stay in it long enough, you realize it's very random. The short term is random, the long term is a definite up. Dollar cost averaging is one of the easiest to implement systems to help you buy when you don't feel like it. Time's up, buy. Market goes up, buy. Market comes down, buy. In fact, when market comes down, your same dollar will be buying more, lowering your average cost. And that's the beauty of having an investment system. You know, so many times I hear investors saying, I want 5% return, 10% return. Josh, where can I get these? I'll answer with this question. What is your investment process? What is your investment system? Because if you don't know, we shouldn't be talking about our goals of investment return. James Clear has this saying, we don't rise to the level of our goals, we fall to the level of our systems. If you do have a proper investment system, your investment results will fall. That is the first thing I address with all private clients. In building up to their retirement, think about it, especially when you're older and have no active income, investment returns become even more important, correct? And as always, if you'd like to engage me on a fee base, look for my links below. I can map out what you need to do in retirement planning and build proper investment systems to help you get there. So in conclusion, I have this to share. If you stay in the markets long enough, you realize that market crashes always happen. And the media, they're just there to hype up what the real reason is. Don't worry about it too much. Getting good returns requires you firstly to set good systems. Keep that in mind, stay patient, and as always, check this video out too on dollar cost averaging, and see you there.